On this episode, I'm joined with Joseph Lanza, financial advisor with Retirement Wealth Advisors, and we're going to talk about income planning, financial planning, and things that you're going to want to hear about your successful retirement. Stay tuned.
Welcome to Farm Truck Financial, where wisdom and wealth ride shotgun. Join Eric Kearney, president of Retirement Wealth Advisors, who believes that the best kind of planning happens when four tires hit the road. So hop in. Today, we're talking about investment strategies that drive results.
Farm Truck Financial, we're riding with you.
And welcome everyone to Farm Truck Financial. My name is Eric Kearney, president of Retirement Wealth Advisors, and today I am joined by Joseph Lanza, investment advisor. Hello, Joseph.
Hey, Eric, how are you?
Great, how are you? Thanks for being here today.
Thanks for having me. This studio is awesome. I think this is an awesome thing that you're doing. So I'm glad I get to be one of the first people on here, if you will.
Yeah, absolutely. You know, we have our TV show, we do the radio show, and we do a podcast, but the podcast was never like really visual, right? So like we put this together, put a lot of effort into it. And really the whole farm truck thing came up was literally I was driving my farm truck one day. It's like, I feel like that's who I am when I drive that farm truck. Like that literally is me. Like I've never been a suit and tie guy. And the one thing that I think about this show is that we don't talk a lot about jargon, Wall Street, or all that big stuff, but yet people have serious money issues. And so I wanted to kind of bring more of a Wall Street feel to Main Street. It's people getting to know us. And I think that you'll agree. I mean, man, we've been working together for almost 9 years now.
Yeah, it's crazy. And you know, it's funny you say that about, you know, this podcast being to really connect with viewers and explain a lot of those terms in a more of a realistic level. And one of the biggest gripes I have with this industry and have had for so long is it feels like it almost purposely makes things more difficult to understand, right? By putting a lot of big names on things and getting, so, you know, the amount of financial literacy that's out there. Now you have social media, now you have, you know, going online, and there's all these different people that have all these different opinions, and it becomes extremely overwhelming. And I think it becomes like a huge daunting task that you have to, you know, I have to learn everything in the financial world in order to put myself in a better position. But as we know, that's not the case, right? You have to understand a few core concepts. And there's a lot of things that once they're broken down, everyday people can understand, right? But there's just not that education that's happening with financial literacy. And it almost feels like the industry is kind of wanting to keep it, right? This is for the big wigs to understand, right? This is for the suit and ties to only understand, not for the everyday people who arguably need it most now. And I know we're going to talk a little bit about that today too.
Yeah, and you know, there's so many people that need more financial education. They want to live a better life. They want to have more money, but they're just not sure how to get there. And so I think the whole purpose of the show is like have a laid back approach and actually talk to people about their money, help educate them a little bit more and try to propel them into a better financial situation without all the use of those big words. You bring up social media. We are social media, right?
Yeah.
I mean,
as much as I don't want it, right?
right. We bash it, but we are part of it and we create it. The problem is that people are watching these 10, 30, 60-second TikToks and they're saying, oh, well, that's how you do it. But then there's another 100 people out there who negate what that person is saying.
Right.
So I think if everybody's always worried about other people, I think true financial planning is really focusing on your personal economy and your personal situation and really understanding what you're trying to accomplish. I had a friend in high school, Ned, and Ned and I were good friends. The problem was that he would come up, he'd be like, Eric, you're not going to believe what Steve got. You're not going to believe what Bill got. And I still remember to this day, we were in 11th grade, and I said to him, I go, Ned, I don't care what everybody else has.
Right.
I only care what I have, right? Because that is what I have. That's where society has to start turning towards. They have to start worrying about themselves, about their personal economy, about their retirement. Who cares what everybody else has, right? It is what you have.
Yeah, and I think you bring up the social media point, right? It's no wonder that people are going to get overwhelmed with all the information that is out there. Right. Once you go down the rabbit hole, and we talk like your algorithm, right? Once the algorithm understands, oh, you like something? Let me, pile you with 100 different videos of 100 different ways to set up your 401k, 100 different suggestions for should you do a Roth or should you do an IRA? And it becomes extremely overwhelming. So it's no wonder that people will just flip the switch and, I'm not going to worry about about that.
Right.
But as we know, that leads to procrastination. When it comes to your finances, it's the last thing that you want to procrastinate about, because we also talk about time is your biggest asset that you have. The more that you start to delay these things, delay taking care of your retirement, the less options that you have for what you could possibly pivot to or put yourself in a better direction.
Right.
So the sooner that you're actually making that a priority on your list, the better you're going to be.
Yeah, I agree. We got to take a quick break on Farm Truck Financial. Stay tuned.
Do you have questions and concerns about your money, lifestyle, and retirement? Like so many, investors today worry about living expenses, healthcare costs, inflation, and stock market volatility. Instead of worrying, start planning. Eric Kearney and his team at Retirement Wealth Advisors want to sit down, get to know you, and start to build a plan that matches your vision and goals. Let's have a real conversation about what's important to you and how we get there. We'll help build you a plan based on your goals, lifestyle, and income needs, with financial clarity over complexity. Call us today for a farm fresh second opinion. Remember, you only retire once, so let's get it right the first time.
And thanks for riding along with Farm Truck Financial. Stock market volatility. Nobody likes it, but really we have to start embracing it. I think as financial advisors, that's what we're trying to educate our clients. It's not going anywhere.
No, and it never will, right? And there's a funny saying that, clients will often say like, well, what if there's another correction, or what if there's a pullback? It's not a matter of if there's a pullback, it's just when is there going to be the next one, right? If you take a look at the past 10 years of what the S&P 500 has done, right? And this bull run that we have been on, we often forget about all the volatility that we've already been through. Because I think the way that the media twists things, the way that the human mind works, it's, well, what's next, right?
Yeah.
And there's one that I just thought about now. Remember the debt ceiling? Like, remember how big of a deal the debt ceiling was, right? I think it was 2023.
Yeah.
Everybody's talking about, oh, they're not going to come to an agreement on the debt ceiling. What is this going to do to the market? But then we forget about that, right?
Yeah.
It's the market has moved on, but then what's the next big bad wolf event that's going to come?
Brexit.
Right?
Think about Brexit. I mean, Brexit was like the end of the world. Like there's going to be like worldwide wars over Brexit. I mean, people were panicking, emails, phone calls, texts, and it's like, I'm moving to cash. And then nothing, like a big nothing, right? Yeah. When we take a look at all these events, I don't know. I think we're getting trained to go to the next major crash. It's like we're always waiting for the next shoe to drop and everything. But really, over time, the market has actually gone up very nicely. It's not always perfect, but we've had some really nice gains over the past 10 years too.
Yeah, for sure. I mean, we talk about it too. It's like the market is positively sloped, meaning the longer you're going to be in it, the more that average rate of return is going to lean out and do well for your portfolio. So if you don't have a plan and an actual portfolio that's built to either withstand volatility or say, hey, if we do have a pullback, if we do have a correction, what are we going to be doing in those times? Right. If you don't have that plan to begin with, then you're basically setting yourself up for failure, where your emotions are going to get the best of you and make you make a decision that maybe is not the best for you. Hindsight's always 20/20. It's always like, oh, well, why did I make that decision during that time? Well, those emotions were heightened and you weren't thinking correctly. Right. That's what the market does to us. And I think a lot of times when we're going through those periods of volatility, what are we really thinking about, right? When we look at our accounts, it's like we don't have a clear answer to, is this volatility going to change my lifestyle, right? That's what we fear, but we're not getting an answer to that question. So when we open up our account and we just see numbers going down, we're saying, can this actually change how I'm going to retire? Right. Or does this mean I have to work later? Or does this mean me and my wife can't go out to eat as much in retirement or can't travel to see the grandkids? Whatever that might be, that's at our core what we're thinking. Yeah. And so if you don't have a financial plan in retirement or some resources, a team that you're working with that is able to show you and prove to you, hey, this volatility is not affecting what you want to achieve in retirement. It's not affecting that you want to go spend time with your grandkids. You guys are going to have plenty of money. Then that's what leads us to have those irrational decision-making experiences.
Yeah. One of my favorite clients is, he's retired now, but we were getting him retired and I would talk to him. He's like, Eric, I'm going to be on the road, but I'll Zoom you or I'll call you. And one of the biggest things was he was flying over 40 weeks per year. So when we started going through his portfolio, we bring up volatility. And he's like, honestly, Eric, I'm on a plane 40 weeks out of the year. I know volatility, right? The bottom line is he had a great point. There's volatility in the air and there's people on the other plane like freaking out a little bit. And he's like watching his movie. He's like, I know I'm going to get from A to B. It's going to be a little bumpy, but I'm going to get there safely, you know? And he's like, so I don't really worry about the stock market. It's just part of the ride, right? No different when you're in a plane. You are going to go through volatile air, but all of a sudden the pilot gets back on. He's like, hey, everybody, get ready for landing because we're about to land, right? So he's like, I've learned about volatility. So I think what we need to do is volatility can actually be our friend. We actually have to start to embrace volatility and say, look, I want to become aware. I want to know that a lot of people don't pay attention. That's another gripe I have about people. We have these massive amount of money in 401ks. We're not paying attention to them. Oh, until times get bad, right? So it's that awareness where people are finally saying, oh, I need to do something about this piece of money. So it's kind of good for them because it kind of rattles them a little bit.
Yeah, it's like one of the good sides of volatility is maybe it actually gets people to open their accounts more and log into their 401ks and say, oh, I should start paying attention to this. You know, I need to make sure that I'm on track for retirement. But we shouldn't wait until the news has articles coming out, the market's in turmoil for you to say, am I going to be okay? You want to know before these events happen, before the stock market goes through corrections, you're on the right path for your retirement and what you want to do to succeed.
Yeah, now they're saying, and maybe when Joseph talks about my de-risking my portfolio, I should actually listen to him, right?
Exactly.
Hey, everybody out there, we got a lot more information to cover. So again, thanks for riding along. Stay tuned for the next segment. We got more on volatility.
You know who has one of the toughest retirements? Procrastinators. You keep telling yourself, yeah, I'm going to get to that. But after months turn into years, you realize that time is one investment you can't buy back. The earlier you start, the longer your money works for you. Stop letting someday steal your future. The best time to start was yesterday. The next best time is right now. Don't let procrastination be the reason you work longer and retire smaller. Call us today for a complimentary review of your finances. And remember, you only retire once. So let's get it right the first time.
And we are back on Farm Truck Financial having a great conversation about stock market volatility. Today, what we want to talk about, Joseph, is reasons why the markets get volatile. I mean, well, you and I know it's part of the deal, right? I mean, it's a market. There's buyers, sellers, and everything. But what really creates that volatility?
Yeah, there could be a lot of different things, right? You have geopolitical events, which are definitely in the news a lot more now than ever before, right? All these different tensions that are going on between countries. You have trade policies that are happening. And then more importantly, though, I think something that happens every single year as we go along is, well, every quarter we have a GDP report, right? It's a kind of an internal look at how healthy is the economy. That can rattle the market or do well for the market as well. And inside of that report is unemployment reports. You have jobs reports that are in there as well. All of those things play into how healthy a stock market could be, right? Because it's essentially saying how healthy is the economy, which, you know, some may think that the stock market is tied to the economy. Sometimes they, as we know and seen in history before, right? Those can be decorrelated. Right? The stock market can continue to move typically 6 to 12 months ahead of where the economy is at. But all those different things can actually affect the market, increase volatility, or even something else is corporate earnings, right?
Do you remember in the beginning of the podcast, we were talking about big words and then we start using decorrelate? Like decorrelate is not allowed to be talked about on Farm Truck Financial.
I'm becoming what I hate in this industry, unfortunately.
But that's what we're talking about.
No, yeah, it's true.
But people, and you know, this is what you and I talk about, right? Decorrelate, standard deviation. We'll have all this talk about this, but really when you talk to the client, they don't want to hear that stuff, right? That's why our business has thrived, Joseph, because we are bringing a very serious subject and breaking it down, but we're also providing them with a solution. And that's really what people are looking at when there's stock market volatility. What if we could actually bring the calm down? We can actually embrace the volatility. We can actually implement tools, products, and strategies to be able to take advantage of that. That's really what we're looking at. And so when things get volatile, people want to know that we're going to be there for them and that they're going to be okay. And I really think that you bring up a lot of good points because what causes it, but also how you react to it.
Yeah. And a lot of times I think when we're talking about volatility and how we're reacting to it, I think it's what we don't do when the market is good as well, right? When there aren't those times of volatility and we have those years with stellar rates of return, well, what are you doing to lock in those rates of return, right? It's like we should be taking some chips off the table when things are really well. And I think a typical investor who's doesn't have a financial plan and is just doing things based off of emotion, they're not prioritizing that enough. That de-risking, as we've talked about it, right? That strategy that you have to have where when things are really good, let's take some chips off the table.
It's a non-emotional event. We're saying, look, things are high. We're at a good place. Let's take chips off the table. Let's preserve those profits. And there's a lot of people that say, no, let it ride, let it ride. That's not good, because I can remember several times in, 2024, we were able to de-risk and take chips off the table 3 times that year. Yet one time when we did it, it was the June of...
I know exactly what you're talking about.
Yeah. Yep. It was in June. Send out an email. We want to de-risk the portfolio. We actually had a client say, no, I'm going to let it ride. And then all of a sudden the market went through a huge correction, right? And for us, it's just a correction. But to other people, it's volatility, 2 different things. With the financial plan, the income plan, the portfolio, everything that we're managing, we are taking the emotion out of it and taking it off before it becomes an emotional event. And I think that that's where people really embrace the whole process that we're going through, and you're controlling that volatility.
Yeah, I think in that process that you mentioned too is we just don't want to tell somebody, hey, you're going to be okay in retirement. We want to show them through data and facts, right? A lot of times, and you can attest to this too, when we sit down with somebody new, right, and you're discovering and you're learning more about their situation, they tell you how they've prepared for retirement, what they want their retirement to look like. Oftentimes they'll ask you, so what do you think? Am I going to be okay?
Right.
And a lot of times I take a step back and I say, I haven't even begun financial planning process of actually putting these things together, right? Of putting together a preliminary income plan or a personal financial blueprint. After I've gone through those steps of actually crafting that plan for you, then it's not just me saying you're going to be okay in retirement. I want to show you through that financial plan, based on data and facts, here's how you're going to be okay. I think a lot of people that are dealing with the financial industry aren't getting that level of service as well.
Oh, I agree.
Right? If they're getting a phone call, they're getting told, oh, yeah, you're okay. Everything looks good. I want to be shown why everything is okay. I want to be shown where my income is going to come from, that I'm fighting inflation, that my taxes are not going to be an issue for myself in retirement. And I just don't think that that's happening for enough retirees.
Yeah, I agree. So along with stock market volatility, there's still a lot of ingredients that are missing in that retirement financial plan, income plan, tax plan, concierge service, a relevant portfolio, knowing that somebody is actually paying attention to that portfolio. So again, if you have any questions, reach out to us today. Get that farm fresh second opinion, and we'll see you soon.
Thanks for riding along with us today. We hope you got some good dirt. If you liked today's show, subscribe, like, and share with all your farm truck friends. We hope you'll join us for the next ride on Farm Truck Financial, where we're always planting seeds for a better future, 1 mile, $1 at a time.
Farm Truck Financial, we're riding with you down the back road steady.